All right, welcome back for the episode of Carnivore Trades. Today is Tuesday, April 11, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel, and come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, basically a flat day here for the market. Doesn't really tell the whole story though. We had a gap up originally, and then we kind of pulled back here into this 10-minute, 20 moving average, had a little bit of a pierce. And right into that 409 area. I told you guys in the short video that 408.50 to 409 would be support. And then we got a nice little rally pretty much all day long, pretty call heavy on the 0 DTE side. And then in the last, half hour or so, we just saw a pretty good unwind there, and pretty good volume there to end the day at the lows. But on the daily chart, no real damage done. Now, obviously tomorrow, the CPI number is the focal point of the market, but outside of that, very light volume here today. You see 6 million shares there in the last 10 minutes. If you subtract that from today's volume, we did 45 million shares outside of the last 10 minutes there. So very light volume, really just kind of a float session as the market, we talked about this yesterday, said it would probably be quiet, definitely on the quieter side today as the market's waiting for that CPI number. Now, what the market wants to see is market wants to see inflation come in, but it doesn't want to see it come in so sharply that you're going to start to see recession fears crop up. And that's really kind of like the Goldilocks number that, everybody's talking about here. But that's kind of what we're looking at. What's the number going to be? What do I think? I don't know. I mean, it's anybody's guess here. We had kind of conflicting data, right? So we had jobs data last week, and PCE data coming in suggesting, a colder data moving forward. And then we had the NFP come in, and that was a little bit hotter than expected. And then we had the revised numbers on Monday that came in hotter than expected. So bottom line, it doesn't really matter. Again, all we care about is the market's reaction here. I'm still in the camp right now that, even if we do see a negative reaction tomorrow, I think that flows and kind of technicals are conducive to it. Probably one more buy the dip move in the markets, unless you take out this area here. If you close below 404.55, that does technical damage to the spiders, and you've got some gaps here that can get filled pretty quickly. There will be support at that 400 whole round number, but overall I don't see anything terrible here for the spiders. We might even see a nothing burger, to be honest. The last couple of CPIs have been basically nothing burgers. We had decent reactions, initial reactions, but then the market kind of calmed down ever since then. So, we'll see what we get. But that's really the technical level we're looking for on the spiders to see, potential damage if it is taken out on a closing basis. Again, remember, if we open down there and we can still rally back up. Okay, so that's what I'm really looking for tomorrow. I'm not sure what happens here with the number, but that's what I'm expecting here, at least, is I think we probably get some type of one more sort of buy the dip. To me, it's just too easy, right? Like, it would be strange if this was the top. To me, I'm not saying it can't happen, but I think for the bears, for the bear play to come into play, for us to make another leg lower, it has to be something more out of left field. People have to be less expecting of it, and it just seems too easy, right? Like, it's a CPI number, everybody goes short, it's going to come in hot, or it's going to come in too cold. I think that's going to be too easy. So that's just my hunch here, but again, we'll let the technicals tell us. The story into tomorrow is, if we look at the triple Qs, that's been under a little bit more pressure here the last 2 days. Remember, if we look at the 2-year, that has come in, so the yield has actually gotten a bid. If we look at the 2-year yield there, that's gotten a bid over the last couple of days, came nicely off the lows. Still, market is expecting a 25 basis point hike at the next Fed meeting. That is per the most recent data. If that changes tomorrow and we get a really cold number, this will come in very sharply, and tech will probably outperform relative to everything else. But again, it's all about that kind of Goldilocks print there. But obviously the triple Q's under a little bit of pressure there. You see Apple. Apple been weak the last 2 days, down another 0.75%. Was down pretty big yesterday as well. And it had a good print on Friday, but last 2 days it does come in. It's still holding that 20 moving average though. No real technical damage, but a nice little drop there. For Apple Computer, Russell 2000 also getting a bit. And again, this is also very much an inflation kind of high yield print, right? So the Russell is green, XLE is green. We mentioned this yesterday. Even XHB, which shouldn't be a high yield play, a high yield bull play anyway, but it has been the last year. That was green. Fins have been green here. So just a little bit of a strange tape, but we are definitely seeing kind of inflation style print here. So maybe the market's positioned for that. If we get deflation, it could be a surprise. Ultimately, again, it's all about those spiders levels. But Russell 2000 getting a bit here. I think I said 178 would be kind of an area there, and that's where it stalled out today. There will be resistance at that red bar high as well. If you come down, you definitely don't want to lose this pivot down here. So that's going to be kind of your danger zone there for the IWM, but I don't really see anything terrible with it at the moment. Someone asked me about a possible inverse. I mean, it's not really the best left shoulder, right? I mean, it's just, you could make a case, I suppose, but I'm not. I mean, that would take you all the way up to about 190. I don't think we have that much gas in the IWM tank there, to be honest. But we'll watch it in tomorrow. The Dow here getting a nice outside move again. Dow leading, again. That's definitely much more a high yield type print, right? So outside move there again. 340 is still kind of the upside target for near term max move there on the diamond. Over to our sectors here as SMH as always, so down 0.5% again, 2-year coming in, so that is putting pressure on tech. Still holding the 20 moving average, but again, we talked about this trend line yesterday. We backed off of that, just like we thought we might today here. Possible pause day, a little pullback. That's exactly what happened. We'll see what it does tomorrow. I'm not in love with this smaller rising wedge. To me, it's all about this bigger one here. So we'll watch the semis moving forward. They are a very important indicator, a very important industry group. And they have been weak lately, so we have to take note of that. That will come back to haunt the market if they don't shape up. But for right now, I think the market is kind of in the safe zone, at least for now. IGV still holding trend as well. Decent little inside day, still holding that inside bar. Look at it, it's just clinging onto that. Let's put in that trend line here, right at the low. So that's going to be 297.50. And we closed above that by 26 cents. Literally, so it's been hanging on there, but this is not, nothing wrong with this right now. When you see these test candles and it coming back and closing inside of that green bar with the 20 moving average upsloping, there's nothing wrong here on the daily time frame from a technical standpoint. On the weekly, nothing wrong either, but just be careful. Big picture, this is a bear flag. So again, we have to consider that moving forward. But IGV holding up well. Cloud software has been acting decently okay. Dow Transports, again, continuing the volatility here. Big move down, little double bottom pierce. Then had that outside move, and then it got faded, and now it's still hovering back above that 14,139 area. Again, we talked about that being the POC. And, if you're above that, generally we're getting a bid. If we're below it, it's definitely on the weaker side. So nothing's changed there. Still have a potential lower high, but transport's shaping up much better here with that kind of higher low there on the daily. If you take out this high, it can get back up to that 14,750 area. So we'll be watching for that. Over the coming weeks, if and when that does happen. Over to housing, we mentioned XHB. So XHB again getting defended at 64, got a bid above the 20 moving average, little gap and go day. That was a strong sector on the day. I don't see a ton more upside here. Maybe we can test 68. Maybe we get a pierce of that again. But again, housing getting a little bit of a bounce there. ITB. Same thing, so back above 70, basically testing that red bar high there. There is resistance in that area. And then VNQ with a nice kind of curling back up type day, made a higher high, so that looks like it should be in a little bit better shape here. That can probably get through 84, but then 85.50 is a pretty big level there for the GNQ. XLF, nights outside move, and again, this is kind of giving me a little bit more of an upside bias here. Excuse me. So we had that move down. We kind of, popped back up there, a little higher low. We reclaimed the 20, and now you have a higher high. So that's important for this market. If XLF is holding up, and let's take a look at KRE. This held up as well, although it's not above that 20 moving average. I would prefer for the bull side. If you had a daily close above the 20 moving average, I'd almost be certain that CPI reaction is going to be positive tomorrow. But it's not. And the KBE is, so that's a positive there, but the XLF is as well. So, and you have a higher high. That's important for the market right now. That gives us a much better technical position to trade off. If fins can catch a bid, this market may be able to catch a bid in any sort of environment here. But for right now, higher high there for XLF. There will be resistance right around 33 on the daily time frame. If you get through that, it's up to the 200 moving average there. Again, I don't see a ton of upside though in fins regardless. Broker dealers below the 20 moving average still have higher lows, still a bigger bear wedge on the weekly time frame. Crude making a nice little move here, up 2%. And, you have a kind of like a little flag there. I am in the camp that I'm thinking we're probably going to pop up into this zone. So again, on the weekly, you can see right there, pivot high. That was the previous inside bar, the 82.72 we were watching for a very long time. I think we're going to try and go up there and test those levels. I think that's a sell, though. This gap is just too wide. It's got to get filled here. It's a quarterly gap. It would be very unusual for crude to just take off and I think crude's going to take off to new highs. But it would be very unusual for this to just take off here and leave that fat of a gap. That would leave me very... I would be nervous as a bull, let's just say, if we just started to take off there, because that opens the door for a ton of real estate on the downside. Go back to 2020. It's reminiscent of this gap, right? So we kept selling. We went to negative 37. But, if you were ballsy enough to buy down here, you made a fortune on crude, on that gap fill. So to me, this has got to get filled here. And if you get up into this area before you're ready, before this really consolidates a lot, it's just going to have too much resistance. So that's kind of my take on crude right now. But nice outside move today. We'll see what it does towards the end of the week. XLE, again, up 1% on the day. Still not taking out that high and still struggling with that 100 moving average. We'll see what that does tomorrow. Obviously, a colder print is worse for energy, but better for general equities, better for tech. XOP holding up okay. Still has that necktie of 100 and 200 moving average. OIH is a mess. Not even going to bother with it. Nat gas here. Nice move. So it's looking like and Nat gas getting a bid here after hours. So we got 45 minutes left. And it's, basically close to that 20 period moving average there. It's poised to close basically right on it. On the 4-hour time frame, you can say for once we had, that same sort of 8 a.m., 9 a.m. slam down that they usually do. And the dip was bought this time. And now we have a crossover between the 50 and 20 on the 4-hour. Really sends back here. This time failed. So nat gas in much better technical positioning. We talked about the seasonality. I think it's right on time here for an April, May to June rally. But we'll see what it does here. Nice little pop there. And yesterday with the engulfing reversal and then some follow through today. So up 2%. Nothing crazy there, but sometimes it takes baby steps to turn around a ship, like the Titanic when it's going down like that. But possible little weekly double bottom. We've been watching that, and we'll see if it can get going here. Anyways, let's get over to the DXY. So the dollar index was much lower today. It actually tagged that 20 moving average, and I don't know why. I'm gonna have to email Thinkorswim. Maybe it needs an update or something. But this has been. I'm just gonna go over to the. So bear with me 1 second here. I'm trying to get this. I can't get my other Chrome page up, so I apologize for that. Okay, well, I was going to show you the trading view dollar index. I don't have it on here. I had to restart my program, so it's kind of finicky right now. But either way, I don't know why I'm getting all these little doji prints on Thinkorswim. I wonder if everybody else is getting these. But it's not like that on TradingView, and it's not like that on other platforms. I don't know what's going on recently, but either way, dollar index came up and touched that 20 essentially earlier, and we backed off of that. So dollar coming in and finishing lower here on the day. Even with stocks basically flat, the dollar did come under pressure. Again, let's not make too much out of it. I still think it has one more leg lower. You guys know where I'm looking for, double bottom. Gold, nice bid there and basically filled that gap. 2023.70. High of the day here is 2022.50. So very close there for gold. We'll see if it does that tomorrow. Again, gold is overbought, but I don't see any other problems. Outside of that, silver, no real changes here. You still have an inside bar. If this moving average catches up, this can have one more advance. I just don't think, it's already had such a sprint that it's just going to be hard for it to continue advancing up into this red bar here. So there's lots of resistance there, and you're already very overbought as it is. But it's holding up for right now, so we'll respect it. Platinum hanging in there, nothing's changed. You still have a daily inside bar. 1040 is still your level there on the daily time frame, and then copper still kind of boasting this bearish inside bar there on the daily, rejecting the 50 moving average for now. If you get above that, maybe it wants to get back up into this 415 area, but outside of that, you have a daily inside bar there, and that is still a bear setup for a move to 375. All right, this is going to bug me because I can't get trading view right now, but because I want to show you Bitcoin here. But Bitcoin surging, and we talked about this for weeks, right? 30,000, it's got to get pierced, and we did. So if we take a look on the overnight, big move up, big thrust, breaking out of this bullish formation, no problems there. We talked about that. And like I said, just pull up my Twitter timeline, YouTube, everything they're ringing the bells. So they're out there in full force right now. I think there's probably a little bit more upside here. At least into 30, I would say at least 32,000, maybe 33. And another reason why I wish I had the actual trading view here on right now, I just can't pull the window up. But the volume, if you guys take a look at the weekly, the volume on this May 2nd to May 9th candle, it's pretty heavy. You can kind of see it here on the futures, but it's pretty heavy. There's bag holders there. That's where I'd be looking to take some off the table here. This is what I think needs to happen. I've been saying this for probably a month now. Bitcoin needs to push up, pierce 30,000, and that's really where it's going to be vulnerable to a correction. I'm starting to say that now. So now I'm putting on the bear costume here for Bitcoin as everybody else is getting very, very euphoric. My Twitter feed is full of people right now who have no business talking about finance, the plumbers essentially, and that's really kind of what I'm seeing. If I'm wrong, and then I'm wrong, but it's going to have to establish itself above this level, back test it, and then hold for me to really kind of think that anything otherwise is happening here. But Bitcoin having a nice move above 30,000. We'll see what it does. You're going into a lot of resistance up here, right around that 32 handle. That's kind of the big area, maybe 33 on a little bit of overshoot there, but that's where I would get cautious on Bitcoin. Anyways, over to the spiders again. So again, just a daily chart doji for the most part, hanging in there, just stalled out at that trend line again, slight lower high. I still think market is in kind of a buy the dip environment unless we can bears can close us below 404.55. Then you negate that inside bar. That's a failed pattern, and we probably go right down to 400, and then honestly probably 395 again at minimum. But we'll see what we get here tomorrow after the number. Anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you all tomorrow.